Good morning, everybody. Hope the week is treating you extremely well. This is where we made the video last week, and this is where we're at right now. So as you can see, the market has not made much of a change at all since the last we spoke. So rather than go through and reanalyze the major U.S. indexes, I wanted to take a deeper dive and take a look at some specific industries, which we have not done in a while. So in this video, we're going to be taking a look at biotechs. We'll be taking a look at agriculture, gold and precious metals, utilities, dividend names, the green energy index, housing, the semiconductors, and of course the transports. So a lot to cover. Let's jump right into it. First and foremost, let's start with the New York Composite Index. Back up over the 200-day moving average, but you can see that major resistance zone, just like we were talking about in the major 4 indexes last week. That is where we are currently at. Downtrend still in play for overall New York Composite Index since last year. Did not make a new high in the second half of the year like a lot of the indexes did. Actually in a prolonged, so to speak, downtrend since the beginning of last year. This is that major resistance zone, and we can see RSI was over 70, is now starting to fall back underneath 70. MACD looks like it wants to cross over. We might get the histogram to go negative as well. So that is a little bit of a concern here, the way this is currently laid out. Let's take a look at some of the riskier areas of the market. So when we talk about riskier areas of the market, we're talking about our biotechs, our semiconductors. When things are going well, people are willing to risk money in those areas because the growth potential is there. And when things are not going well, we typically tend to see those areas of the market suffer more than your dividend names and safe blue chip type plays. So when we take a look in at the biotech index, we can see here that we are over that 200-day moving average. We are still kind of in this resistance zone right here. Potential, depending on how you look at this, potential inverse head and shoulders type pattern that was set up, holding over that 200-day moving average here for a week or so. So that's a pretty good sign here for the NASDAQ Biotech Index. However, just like we have on the major indexes, we have a lot of overhead resistance that is in play here, so we're not quite out of the woods yet. This should be a difficult, hard-fought battle zone, and we're going to be paying very close attention to that here. An area that we haven't spoken too much about in the past, global agriculture. This very much like the New York Composite Index has just been on a downtrend, did not make a new high second half of last year. It is weaker. It is holding underneath that 200-day moving average, has not made as strong of a bounce, but also a potential inverse head and shoulders type pattern is set up here. We're looking to see this carry over that 205 level, that 200-day moving average, and then the next important resistance zone is up at that 217 zone. This is an area to certainly continue to pay attention to. Let's take a look now at the gold and precious metals index. It's had a sharp rally the second half of last year into the beginning of this year. Started to actually turn well before the overall market bottomed, which does make some sense. Some people do view this as a flight to safety when we are seeing the overall market make a pullback. One of the things you will note, major resistance at that 180 to 195 that has been in play here for multiple years. This is 3 years worth of a chart right here, and so we rallied right up into that major resistance zone and subsequently have started to fall back from there. So those gold bulls are really going to be paying attention to this 180 to 190 zone. That's where that hard-fought battle subsequently is going to play out. But so far, it's just, if we really look at this, it is a zone, breakdown below that zone, push back up into this zone, and a failure to break out of that zone. So we're really fighting in two separate blocks, so to speak, two separate areas of price action. We went from the lower end back to the top end, could not break out of it, starting to head back to that midpoint. So we'll continue to keep our eyes on this. If the overall world's economies, global markets do tend to turn down here, if they do turn down, we would be wanting to pay attention to the gold and precious metal index as a potential opportunity for safety. So far, not giving that signal just yet. Um, Also, when we talk about high beta, we're talking about the semiconductors. Semiconductors are typically a leading indicator when they're doing extremely well. That's typically good. Companies are buying that additional technology to continue to improve their products, their assembly lines, etc. Um, when the semiconductors are heading lower, that is, of course, an area for concern. And they've actually done a much stronger job than most of the indexes. You can see this was that zone of resistance, clearly cleared above it, above the 10, the 20, the 50, and the 200-day moving average. They're all pointed up. That is good. The downside, of course, is where did it fail? It failed right at that previous resistance zone from the beginning of last year. So again, another zone where we need to see kind of that hard-fought battle to figure out whether or not we're going to continue to head higher, or whether this was just a nice rally right into resistance, and ultimately, you may get a rollover. So a lot of the higher beta names looking like the overall indexes. We've got resistance zones above that we're just not quite pushing through, and that's kind of really what I wanted to look at in today's video. It's not just the indexes, but it's the individual sectors as well, where we've got the same type of look to them. Clean Energy Index has done very well. Cleared that 200-day moving average, cleared that zone of resistance a few weeks back. Has continued to push up, but once again, where is it stalling out? It's stalling out at that last year's highs, that resistance level. This is a very important area to pay attention to. I think this is certainly a potential high growth sector of the market here moving forward. So if we can get up and above those highs from last year, that would bode extremely well. Things to note here again, into that resistance zone kind of failing, and we go from that above 70 RSI to under 70 RSI. MACD looking like it wants to turn down, hasn't done it yet. So definitely want to pay attention to this sector right here. Next, let's jump into to housing. Let's take a look over at the housing index. It had just an abysmal year last year, and not even close to making a comeback in the second half of the year and pushing to new highs. One of the worst performing areas of the market last year. Very clearly, you can see just one line really describes this chart. A breakout back in here, acts as support for a while, breaks down underneath, makes a potential bear flag right here, breaks down, and then pushes right back up right into that resistance zone. Right, it is above the 200-day moving average and the 10 and the 20 and the 50 at this moment, but major resistance right here. This is a really important chart to pay attention to. The housing sector certainly makes up a decent portion of the American economy. RSI back clearly below that 70 zone, looking like a breakdown. You've got that MACD crossover and the histogram flipping negative after running into that major resistance zone and that run up. So this is an area that I definitely want to pay very close attention to moving forward. I think what happens here will be very important across the board. Now, let's take a look at some more safety names, so to speak. Let's take a look in at the utilities. They've gone and actually made a new high here in the last week. And the dividend, the NASDAQ Dividend Achievers Index is almost at that new high. It's sitting right there, just a stone's throw away from it at this point. Now, when we see utilities leading us higher, when we see more safety names like dividend players, really kind of leading the way, that makes you kind of sit back and think, is this market really in a risk-on environment, or are people starting to rotate out of some of those higher risky sectors and putting their capital into places where they're going to get yield? And typically, we do not see markets tend to push higher with utilities and dividend names leading the way. Typically, we need to see a sub-index, kind of really leading the charge, so to speak, a growth area, so to speak. So this is a little bit concerning when I see utilities making new highs, and I don't see that happening from any of the other indexes that we took a look at. Last thing that I wanted to take a look at is the Dow Jones Transports. It's an area that I think is very, very important. Transports, when they're pushing and making new highs, is telling me goods are being shipped around the economy. It's a very a positive signal for the overall economy. This one very clearly rejected so far, and actually has been leading down here over the last week, 5-6 days in a row to the downside. Back under that 70 RSI, MACD is crossed over. We've got the histogram flipped negative here as well, and it is back under that 200-day moving average. It's a bit of a concern, especially after this amazing run-up. Now, it has not broken that uptrend as of yet, but really any more downside here would break that nice uptrend line that has been in place from late December, and that would be a negative sign here for the overall economy, and might spill over there over into the major indexes. So as you can see, a lot of the charts look very similar. Areas of concern, again, utilities, dividend names leading us to the upside. We're not seeing those same pushes out of the higher risk sectors, those growth areas where you really would like to see those pushes higher to get that new leadership to drive us up to new all-time highs on the major indexes. So a lot to pay attention here. And we're going to continue to cover that in these videos. But again, not a whole lot of change from last week, just a number of areas that we really do want to continue to pay attention to. And hopefully we'll get some sort of resolution of whether or not we're going to continue to make that break out when we're pushing through these resistance zones across all these different indexes that we talked today, or we're going to get that failure and we are going to make that pullback. Either way, let's just stay diligent, just pay attention, manage our risk. But at the end of the day, it doesn't make a difference if the market is going up or the market is going down. We have to listen to what it's saying and position ourselves accordingly, and hopefully that's what these videos are helping you guys do. Have yourselves a fantastic week.